Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hey, everybody, and welcome to the Finovate podcast. Joining me today, we have Tiffani Montez, Principal Analyst of Insider Intelligence. Tiffani, thank you so much for joining me today.
Yeah, thank you. It was great to see you in the spring, and thank you for inviting me to be a guest on the show today.
Yeah, no, I wanted to follow up on the conversation that we kind of started at Finovate Spring. But before we jump into that piece, can you start by just giving us some background on yourself and where you're coming from in the industry?
Yeah, absolutely. So I am a principal analyst at Insider Intelligence, leading our banking vertical. For those of you that aren't familiar with who Insider Intelligence is, we are a trusted resource for digital transformation intelligence. And so really our team has deep experience that allows us to deliver relevant and timely analysis across 4 key coverage areas. And those areas are financial services, marketing and advertising, telecom and technology, and digital health. I've been with Insider Intelligence close to a year. Before that, I was the strategic advisor at IT Navarca, covering really anything related to digital experience. And then before my time at IT Navarca, I was the head of operations at Tiffani, helping our clients launch account opening solutions. And then before my time at Tiffani, I was an analyst at Forrester Research for a few years, again, covering a variety of topics that fall under the digital banking umbrella. And then before my time at Forrester, I was with Wells Fargo for 20 years. I won't bore you with all the details of what I did there, but I'll focus on the last 10 or so years of my time there. And that was really helping them build digital experiences for various product groups within that organization.
No, that's excellent. I mean, I think the experience that you've got, the number of different viewpoints and angles are really something that is very unique. And I think we got a little bit of that when you joined us at Finovate Spring back there in San Francisco. And there were 2 sessions that we had you talking about there, and thanks for your help with both of them. The first one was kind of about financial wellness and inclusion. And then the second one, you were on a panel talking about how banks can deliver on an outstanding customer experience. And I think given kind of what you just shared about your background, it's easy to see where both of those, or how both of those topics became something that you're very comfortable speaking on. What I want to talk about is something maybe even a little bit higher level than both of those. And that's just sort of this general concept of customer happiness. How do we keep customers happy? I think this is a question which sounds really simple, but is actually really complicated. And so let's go ahead and break it down a little bit, because I think all these elements will play a factor there. Let's start by just this kind of relatively simple question. What do you think are the key ingredients banks need to deliver to make their customers, quote unquote, happy?
Yes, I think I'd start with 3 things. The first, which in my mind is the most important, is really about consumer trust. And so how do you safeguard consumer trust? We know that digital trust is the confidence that consumers place in their bank's digital channels. And they have really a prime opportunity to build this up as a commodity. So we know over the last year, the largest US banks have come to aid in a time of pandemic-related crisis. And customers have repaid that flexibility with greater trust in their primary financial institutions. And so really banks should look to position that strength to deepen customer relationships as, the US has, we'll call it return to normal, but also as we start to enter potentially a recession, safeguarding that trust becomes really important. I think the second thing really is about giving consumers the digital features or the experiences that we demand the most. And so when we think about experiences, we know today that a mobile experience is critical for financial institutions, given their heavy reliance on the channel. So based on some research that we did towards the end of the year, we know that 87% of consumers in the United States that we surveyed said that mobile is their primary way to access their checking accounts. So really making mobile the most impactful channel in a customer's banking relationship. So, really oftentimes financial institutions think that the more features that you have equals a better experience. And what we know from our research is not about more features, it's about the sophistication of this feature. does the feature provide unique customer value? So really focusing on the things that consumers want the most. The third thing I would say is really focusing on building empowering financial experiences. And so in, the May of this year, we know that the cost of living increased to its highest rate in more than 40 years, really eroding consumers' personal savings. And so according to the US Department of Commerce, the personal savings rate, so personal savings as a percentage of disposable income, dropped to 5.2% in April. And that's the lowest it's been since October of 2019. And so we expect that financial institutions in this type of environment will start to lean much more heavily in delivering personal financial management tools. And we've seen, firms like Bank of America report that their digital financial wellness experiences through Life Plan has surpassed 6 million people as of February of 2022. So we expect that banks will continue to build out money management insights and making them increasingly more predictive and actionable. And what I mean by predictive and actionable, really in its simplest terms, is how do you move from making a customer aware of their finances and be able to start to use different features to begin to surface financial insight. And through that financial insight, how do you help consumers understand how their financial behavior impacts their ability to meet their goal, and then be able to deliver actionable advice that aligns with that?
No, that's really interesting. I mean, that's a pretty comprehensive answer right there. And there are a couple different pieces that you touched on that we'll want to engage with. I think one of the big ones, obviously, is these kind of external factors that are coming in, the cost of living increase, the idea that we're coming into a recession. Obviously, these are things which make consumers unhappy with their finances. We're in a moment right now where there are a lot of people, maybe more people than we've seen in quite some time, who are really in a position where they're kind of hurting a little bit, where maybe coming in and checking their bank account is not something which brings them joy. And obviously, there's only so much that from a tech standpoint we can do to alleviate that. But at the same time, there are things that the industry can do to kind of help people still maintain a positive relationship with their organization, which you kind of talked about. I think trust is obviously a really crucial one. Let's talk about UX a little bit more, because I think it's clearly safe to say UX is really important in this area. But I think a lot of times we think of it about from the standpoint of the elimination of pain points instead of something that, quote unquote, surprises and delights, to take a page out of the Starbucks employee manual that I read somewhere around 15 years ago. How far do you think a good UX can take you in this quest?
I think a good UX can take you a long way. But when I think of UX, I think about it under a couple of different core principles in my mind that, I think when we think about UX, oftentimes we look at it under the context of how you use technology. But to me, it's really more about the overarching experience that you build with your customer and how they interact with you. And so when you think about an overarching experience, technology aside, what that really means is that you're demonstrating that you know who customers are, that you understand them, that you keep their best interest and society's best interest in mind, and that you're here to help them meet any of their financial goals. And so it's about doing all of those things, but it's also about proving all of those things to them in every interaction, every day. And so when we start to break that down, it really, for most financial institutions, will mean that they have to break their digital legacy mindset. So oftentimes UX is viewed in the context of taking technology, and unfortunately, a lot of times that means taking that technology and replicating the same process that exists somewhere else. But really, a good UX is about getting down to understanding what a customer needs, the best and easiest way to deliver all of that using the principles that I mentioned earlier, and delivering on that experience in a transparent way. And so if I give an example of sort of legacy mindset and conversations that I've had with clients over the years and them having trouble sort of breaking that mold of doing things the same way that they've always done that. I'll give an example of, when conversational banking started to take off. and starting to talk to clients about the different use cases involved with that. I recall having a conversation with a client where they wanted to use conversational banking in the application process, or like we'll call it the product discovery phase. And so the conversation was like, how do you use a chatbot to answer product related questions and then drive them to the best product? And as we had those conversations, it became pretty clear to me that they were taking conversational banking and sort of using it in the front loaded part of the process. But at a certain point, they started to pivot and just replicate everything that they were already doing in a digital channel, meaning they wanted to use the chatbot to converse and ask questions about products. But then at the end, they wanted to send them to a product selector so that they could answer those same exact questions that they just answered in the chatbot. And so, really a good UX, outside of the principles that I outlined earlier, really becomes about how do you look at the same interactions that you've had with consumers in channels in the past and completely reinventing those in a way that make it seamless, easier to use, actionable, and clearly demonstrate that the journey that you're taking consumers down is the right journey for them.
Yeah, and I love the idea of kind of expanding what we consider UX, because it really is this holistic day in, day out experience, not sort of a snapshot, not a one moment in time. I came into the app one time and did this thing and it was really pretty, which can be very important. Of course, you want the app to be pretty, obviously, but it's really much more than that. It's about creating this deeper experience so that people have a good experience every time they come in. And I think your point also about making sure that we're actually looking at this, what can we bring to them that we couldn't do before, rather than just kind of taking what we'd been doing, turning it digital and saying, hey, it's a brand new UX is, I think that's good as a first step, but it's clearly not where you need to be by the end. Let's move on to the kind of second side of it, which was looking at guiding customers to long-term financial health. Obviously, that's a really difficult one. There's only so much that we can do. We don't have control over our users' behaviors in a way that can help them, ensure long-term financial stability. There's obviously external factors at play, but I think this is one of those areas where clearly the banks that are able to create this kind of relationship and show that they're invested in their own customers' long-term financial health is really important. So I think this is where we kind of start talking about what is customer satisfaction or versus happiness. Maybe sometimes the customers who are the most financially secure sometimes seem the least quote unquote happy, which is maybe one of those interesting dynamics. But what's your take on this, and how banks should be thinking about their customers' financial health versus their quote unquote happiness? Sometimes doing the right thing here doesn't make you happy.
Very true. I would say that I view customer happiness and even satisfaction under the context of trust. And I talked a little bit about this earlier, but when we start thinking about digital, and one of the things I shared is that mobile clearly is the primary channel where consumers interact with the banks the most. When it comes to trust, it's really about how you deliver on, I would call it 6 key factors that influence a consumer's trust of a financial institution. And so when I think about these different factors that come into play around trust that drive satisfaction or happiness, as we talked about earlier, it's about security, it's about privacy, the reputation of a financial institution, how reliable they are, how easy it is to use their digital banking capabilities, and their feature breadth. And so one of the things that we do every year is we do a survey on banking digital trust. And we go out and survey a little over 2,000 US consumers to determine how they perceive a bank's digital trustworthiness. And we really look at the top 10 US banks across those 6 different dimensions. And so one of the things that we found in this particular study is that digital trust really is essential to retaining customers and boosting revenues. And so, while also giving banks an advantage over their non-bank rivals. So our survey shows that US digital banking users with higher than average levels of digital trust are more satisfied and engaged with their bank. And as a result of that, they're more likely to open up their next account or product with their current bank than any other, digital banking users with below level trusts. we also know in this period of time that there are threats to retaining that type of trust, and that incumbents are competing with heavy or tech savvy, deep pocket rivals, such as neobanks, big techs, or even retail brands on digital experiences. And that there's a surge in new banking users has increased the potential for things like cybercrime, breaches, and even PR disasters in some respect. So we know right now that banks must work really hard to be able to keep that trust advantage by defining some of the key areas across those six pillars that I mentioned earlier to improve trust. And if I were to share just kind of sort of the tidbits of that study and of the six categories that I mentioned earlier, which ones are the most important? Security really was the top factor for determining trust. And that, the lingering effects of pandemic related fraud has only escalated concerns. We also know that privacy was the second most crucial factor in determining trust in digital banking. And it will become the most important factor in the face of third-party cookie death and even tighter regulation. And then the third one that I'll mention, again in order, is that reputation affects digital trust in banking. So banks really need to find ways to cement improved customer sentiment. And really, as we enter again an environment where consumers are going to face financial hardship in some cases, how do you maintain your reputation by demonstrating that you're doing not only what's right for your customers, but what's right for society?
Yeah, no, that's a lot to unpack there, and I'm afraid we're kind of running out of time a little bit here. And I want to just quickly get to sort of the last couple of questions here for the final 2 or 3 minutes, which really talk about kind of bringing this back into the real world. The reason we're talking about this, of course, happy customers are much more likely to stay customers. They're much more likely to build this long-term relationship. So, really quickly, what would you say are the things that banks really need to be doing right now that maybe they didn't have to do even 5 years ago as a result of sort of this economic uncertainty that we're facing at the moment?
I think the biggest thing that financial institutions are going to have to do right now is to really break the mold and to find new products, services, and even experiences that consumers need the most. And to do that, it's going to be really important for them to keep an eye on competition. And we know that competition now increasingly includes, competitors like big tech and even retail brands. And so really to look at the experience they deliver and where they might be embedding products and services. So, given everything that's going on in the financial services ecosystem, it's going to be really important for financial institutions over the next few years to really understand how they're going to play in emerging touch points like embedded finance, super apps, and even the metaverse.
How about from the other side? How about from the fintech innovator side? What opportunities do you see for that group?
Gosh, I think the fintechs have a rough road ahead. We know that they've been a casualty of 2025, and that largely has to do with funding drying up. And, as a result of that, many of the fintechs seeing their valuations fall. So some of them have, been cut in half and worse. And we know the three most prominent players in the space, neobanks, buy now, pay later, and even crypto firms are the ones that are probably suffering the most. What I would say to them is, really at this point, it's good to be grounded in reality and to make sure that you really understand and that you recast what you think that your growth looks like. The second thing that I would say is, really to carefully assess competition. Competition isn't just other fintechs. Competition is also incumbent banks, neobanks, big techs, and retailers, as I mentioned earlier. And so it's really going to be about making sure that you are using the funding that you do have to make investments that create unique customer value.
Yeah, no, I think really you kind of hit the nail on the head there, where clearly there's a moment where there's a lot of uncertainty. There's a lot of competitors coming into the space. It's time for everybody to just sort of be maybe a little bit more cautious, be aware of all the different threats that are coming in, but at the same time, recognizing that there are a lot of opportunities here to come and do things which can really make customers' lives better. And I think this is one of the challenges that we have. Again, there is only so much that fintech can really do, but at the same time, those banks that excel here, those banks that keep the customer at the forefront and really give people the experience that they want, not just from this is a pleasant experience that I enjoy, but long term, this is an experience which is going to bring me to financial health. I think it's going to be a very competitive space, but there will be some winners who come out of it. So there's obviously a lot more we could talk about, but I'm afraid we have to end it here. I really do appreciate you taking the time to talk through such a nebulous topic with me. It's been a pleasure, Tiffani.
Yeah, it's been a pleasure. Thank you again for inviting me to participate in the conversation today.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.